Today on Forbes, Wall Street looks forward to less regulation and higher profits. Investors celebrated Donald Trump's decisive victory in last week's presidential election, with banks and alternative investing firms among the biggest winners in anticipation of more lenient regulations. Goldman Sachs soared 12% in the last 3 days of the week, and peers like JPMorgan, Citigroup, Morgan Stanley, and Bank of America, as well as private equity giants KKR and Apollo, all gained at least 7%. The rally extended to smaller banks, with the KBW Regional Banking Index up 10% in that span, as financials helped propel the S&P 500 index's 3.7% gain in the final 3 days of the week to a new record high. The reaction was a show of exultation and hopefulness that Trump will fill out his cabinet with a Treasury Secretary sympathetic to Wall Street and replace stricter regulations at agencies like the Securities and Exchange Commission and the Federal Trade Commission. Trump's win, along with a probable Republican Congress once all the votes are counted in close House races, also makes it more likely that the generous corporate tax cuts he enacted during his first term will be extended when they expire at the end of next year. Stephen Bigar, Director of Financial Institutions Research at Argus, says, quote, "It's a fairly heavily regulated industry, and to the extent you get the government off your back a little bit, it's going to be positive." Bank regulations have been tightened significantly around the world since the global financial crisis, part of a framework put in place by the Basel Committee on Banking Supervision, in an effort to reduce the risk of insolvency and bank failures. The so-called Basel III Endgame rules, scheduled to take effect next summer, initially hiked major banks' capital requirements by 19%, though after fierce resistance from industry leaders, JPMorgan CEO Jamie Dimon called many of the rules, quote, "flawed and poorly calibrated," the Federal Reserve scaled that hike back to 9% in September. Now Citigroup CEO Jane Fraser said last Friday in a CNBC interview that she expects requirements to be eased further. Mike Mayo, a longtime banking analyst at Wells Fargo, says, quote, "I consider this a watershed moment in turning the page for bank regulation. The post-global financial crisis period is now over. The pendulum had already started to swing back, but now it's likely to swing back even more." Lighter capital requirements will help banks make more loans and earn more interest, and an expected increase in mergers and acquisitions activity would also bolster capital markets profits for Wall Street's largest investment banks. Total M&A activity dropped 17% in 2023 to around $3 trillion in deal volume, and although it has slightly rebounded this year, it's still far from the peak that investment banking divisions enjoyed in 2021. Private equity firms and acquisition-hungry businesses were already gearing up for a big 2025, with interest rates expected to come down. Private equity firms worldwide have $2.6 trillion in dry powder ready to be put to use, according to S&P Global, though another Trump administration does carry some risk. Bond yields have already gone up since the election, as investors expect deficits to remain persistently high if tax cuts are extended. And Trump's threat of tariffs may cause prices to rise again and bring back inflation and higher rates. High interest rates have been a primary culprit for the deal-making slump in the last 2 years, but bankers and politicians have also pointed the finger at Federal Trade Commission Chair Lina Khan. Celebrated by progressives for challenging corporate monopolies, Khan has been vilified by conservatives for scuttling deals and overseeing lengthy reviews. SEC Chair Gary Gensler, nominated by Joe Biden in 2021, is another target of Trump's ire. The SEC has adopted dozens of new rules under Gensler's leadership on topics like environmental social governance reporting requirements and stricter SPAC disclosures for sponsor compensation and conflicts of interest. Trump's vow to fire Gensler was also applauded by crypto evangelists, as Gensler has taken a hard line on digital assets, including lawsuits against exchanges Coinbase and Kraken. For full coverage, check out Hank Tucker's piece on Forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.